Welcome back. Up now, Forum Daily's weekly market update with Catherine Murray, host of The Buck Stops Here. All yours, Catherine.
Thanks, Nathaniel. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we continue to see a lot of volatility in the marketplace. I know I say that week after week, but that is exactly the environment that we're in as it relates to the markets. You've got a lot of push and pull between the bears and the bulls. Really, the bears, though, have been winning. You will see a lot of your stocks are down by 30 to 40%. Of course, the key contributor there is what the U.S. Federal Reserve, which is the leading central banker in the world, really, in terms of the size and the dominance that it has for risk on assets. The fact that they're in this tightening mode and don't seem to be backing away from that is putting a lot of pressure on risk on assets. And now, of course, they're doing that because of the higher reading on the inflation front. But nonetheless, it's really a driver. It has been the driver of volatility. As we look at the markets this week, we had two huge up days, Monday and Tuesday, probably because investors are thinking that the U.S. Federal Reserve is pushing the economy into a recession and perhaps a deeper, longer recession, and it will be hitting the breaking point. Therefore, the U.S. Federal Reserve will, in fact, hold off. That is why we're seeing these markets rally, also perhaps some short covering, but nonetheless, there's a lot of skepticism whether or not that will continue. In other words, are we actually just seeing bear market rallies? That is the broader consensus, that these rallies we're seeing, which we're seeing once again today, are in fact bear market rallies. We will have to wait and see whether or not that will continue to occur, but definitely the consensus is that it is a bear market rally. Investors are looking at the terminal rate for the overall rate environment to be about 5%. We've got sticky inflation. We know that. And we know, of course, that the U.S. Federal Reserve is still very aggressive in their tightening mode. As it relates to the broader markets, and we look at economic data to indicate where we're going next, we are seeing definitely a bit of a slowdown in economic data. The Philly Fed Manufacturing Index, for one, did disappoint. We're also, of course, keeping our eyes on earnings. And I think the broader theme or takeaway is that there is disappointment. Many CEOs are talking about the macro uncertainty and the negative impact that that very strong U.S. dollar is having on earnings and margins. That would be more for the global companies. We did, however, see some positive results from travel companies. So you definitely are seeing a bit of a shift from the goods to the services side of the economy. So that perhaps is a positive takeaway. And you actually did see that within Las Vegas Sands results. They did beat. They had some strength actually out of Singapore. We also had some strong results out of American Airlines. So again, people are getting back into travel and to really, again, shifting from buying goods, which we've been doing during COVID, and moving into the services side of the economy. Away from that, front and center, of course, will be Tesla. They did miss on their revenue as well as their margins, and they do expect to miss their delivery numbers. But Elon Musk was very upbeat in terms of the long-term demand. So that stock was under pressure to about 4% or so, in case you're interested in looking at it. And away from that, of course, perhaps helping sentiment a little bit is that there are reports that China could shorten the COVID quarantine time for international arrivals. Away from that, we had some big moves in the price of oil. Oil was higher by about 2%. Today, following about a 3% gain on Wednesday. So again, those energy shares are still very much in focus for a lot of investors. TSX had a big day Monday and Tuesday this week as well, up by about 2.6% to start the week. Canadian dollar has been a little bit stronger versus the US dollar, but of course, it's in total has been incredibly weak versus the US dollar, like many currencies. And that is leading to the very difficult importation of food inflation for many Canadians. Also, of course, we have had higher inflation here in Canada, and that is likely going to lead the Bank of Canada to raise rates by 75 basis points next week. So put that on your calendar to watch for next week. And of course, what that means for your mortgages and for your credit cards and auto loans as well. It looks as though there's no stopping these various central bankers around the world in terms of raising rates. But again, the big question is, when will they stop? When will it be too much? When are we hitting the breaking point? And when will we start to see perhaps the U.S. Federal Reserve pivot? I did have a great interview this morning with Larry McDonald. I encourage you to watch it. He was He's a best-selling author, and he was also at the forefront during the financial crisis working at Lehman Brothers. He's got a lot of great insight in terms of the various imbalances in the marketplace right now and where we go next. That airs on Sunday. Shameless plug. Nathaniel, I'll leave it there. Back to you.
Well, thanks for that, Catherine. Again, that was Catherine Murray, host of The Buck Stops Here. It airs Sunday mornings at 9 a.m. Eastern only on the News Forum Network. Well, news from around the world up next. The UK Prime Minister resigns. Iran denies sending Russia weapons, and Ebola worsens in Uganda. Stay with us. Forum Daily will be right back.